Are you able to see my screen?
Yes.
So let's start the session. Okay. Hi, everybody. Just a minute.
Hi.
Hi. Okay, so let me have a small recap of the last session. Recap is always good. I think we started from this one. In the last class, what we have learned is support and resistance, and we knew that how to use it when drawing certain set of lines, and then when to buy and when to sell. And then we learned a very, very strong technical analysis, which is the Ichimoku. Ichimoku contains 4 signals. One is the T line or the base line, conversion line. And then this blue line is a base line or the K line. And then there is a Kumo cloud, and there is a lagging line, which is the closing price of the current thing is 26 days back. And we have known that this K line, if it is a flat, do not purchase it. And if the price is above the K line, then you can buy it. We also knew that TK cross. So the faster line is the T line and the slower line is the K line. So whenever the T line goes above the K line, it is a time to buy. Then we knew about the Kumo cloud, and the Kumo cloud, if the price is above the Kumo cloud, then it is the time to buy. Even if it crosses and then somewhere it is above, you can buy, keep on buying. Okay. We knew that the thin and the thick Kumo cloud, the thin Kumo cloud is easier for breaking. And then the final thing is the Kumo twist. That means if there is a Kumo twist, and then it is a strong, the buying signal. And we knew that a confirmatory signal, which is a Chiku span, if there is a Chiku is cutting from the bottom to up, then you have to go ahead, 26 candle, and then that day you can buy it. So the combination of the Ichimoku also we have seen. We have seen the parabolic SR. This is a new slide I explained, but I did not add. And then one interesting thing I did not teach you, that this parabolic SR also can be used as a stop loss signal. Okay. What is that? Let me explain in this class a little bit. Before that, I will start it. Okay. So you know that there will be a series of lines, and these dots is a very simple thing. As long as the dots are below the price, you keep on buying. That's all. Whenever there will be switching, that means it is a reversal trend, and then you can sell. But this one, the wherever dot is, that line you can consider as a stop loss. I will show with an example. I'll switch on this one for any, you can take any signal. Yeah. I will put up the other signal because moving average, etc. Okay. Now you see, let's say this one. This is a buy, and uh, and then suddenly you will see that there is a line here. Is a this one. So use this one as a stop loss. Okay, if the price goes below this particular line, currently it is not happening, then use that as a stop loss. Similarly, here let's take this example and let's have a closed look. Okay, so like this on the 14th February, I can see there is a line, and then you can use this line and then use this line whenever it is falling below this line, then you exit from the stock. So this is the one. Now let's come to the coming class. Okay, so in today's class, I'm going to tell you about the candlesticks pattern. So let's have a revisit on the candlesticks. You have already known the candlesticks, but let me have the very short revisit. We have seen this candlesticks some time back while doing the fundamental analysis, and yes. So let's revert to this figure that the price is continuously going up and down. Okay, the starting price is a small these things, and this the opening price is the start of the candle. Closing, if the closing price is a higher, then it is a white candle or the green candle, and then the highest there is a small shadow upward. This is the upper shadow. Similarly, when the price is falling down, opening is this one, closing is this one. So it becomes a black one. So it is a reverse of that. In that white candle, opening is bottom, closing is this one. So with this knowledge, you can see there will be large number of the patterns. And let's look at the patterns so that we'll know from the pattern. This pattern is very, very useful just to know that on what particular date you are going to buy or you are going to sell. And typically, suppose you find there is some good stock and then this good stock you want to purchase, or you are holding some stocks and you want to sell, on what basis you will take a decision. So candlesticks typically depend upon the psychology of the investor or the psychology of the trader. Candlestick pattern is a little bit complicated because there are large variety of the pattern, but there are few patterns which are very important. There is a good book also on the candlestick pattern, you can read it. But let me explain some of the patterns. The first is the Maribuzo pattern. The Maribuzo pattern is characterized that there is a long body. This is called the body, as you know, and upper shadow, lower shadow. So there is a large body of this. Practically, there is a no upper shadow, or even if the upper shadow is there, then it will be very, very small upper shadow. So if that one is there, then you are going to predict there will be a huge change. So if it is already at the top of the rising trend and then the Marubuzo occur, then it indicates either a strong bull or a bear. So because it is rising, now the stock price is going to fall. And then the similar thing you can see that if it is a very, very small body or equal or, equal upper or lower shadows, and the color does not matter. Okay. In that case, also a indecision. Okay. And in that case, also it is going to change. The direction is going to change. So let me summarize. This is a single pattern of a candlesticks. That means you will look only one single candlesticks. You will not look back the previous candlesticks pattern. So one single pattern, either it is a very big or very small. there is going to be a change in the direction. Okay, so such things, I don't know whether we can find practically. Here we can see something. Let me put off all the signals. Otherwise, maybe a little bit confusing for you. Okay. Yeah, you can see either this, sometimes it may happen. For example, let's go here. There's a very long body, okay? And it is the price is continuously rising. So you are going to be very careful that maybe 1 or 2 days, the price is going to fall. And it has exactly happened. Similarly, there was a fall in, and then there was a sudden big body. It has still fallen down, but then it has jumped up. You can take anything and then predict about this. Let me predict. I'll take another example. So it has happened here that there is a fall, and it is not like the next day it will happen. 2-3 signals ahead that there is a long body, and you can see the small things. It is an indecision. So indecision means it can, have a reverse change. However, you cannot take this one as a permanent this thing. There are other associated signals. Now let's go to the next one. It is called the hanging man, or the shooting star. What is that? Is a hanging man? It looks like a hammer. You can see, or the inverted hammer. That means it will have a small body and a long handle. So the direction of the handle, it does not matter whether the lower handle or lower shadow or the upper shadow, but it will have. So whenever you will see such things, generally hammer is called whenever that long handle is at the bottom, and then when it is an inverted hammer. So it can either happen at the bottom of a trend or at the top of a trend. In any one of the trend, there will be a reversal of the signal. Let me go here.
যাও না নিজের ঘরে গিয়ে করো না, ঘরে গিয়ে করো না, সবসময় আঙ্গুল দেখিও না, পারা যায় না এরকম ভাবে।
Just a minute, hold on.
তোমার পারা যায় না।
Hello? Are you able to hear me?
Yeah. Yes.
Yeah. Sorry for the gap. Yes. So you can see that if there is a short body and a long handle, then it is a reversal of the signal. Maybe let me find. It is not like that always you will be finding it, but there is a possibility that you will find many of the things. So in the current pattern, let me handle. See, this is one of the pattern it has handled. Okay, and not really in that. So it is not like that always you'll find this pattern, but just keep remember. Let me go to the another one. It is the mixed pattern. Okay, that means it is a reversal of that, but it will have definitely a body. Okay, whenever it will be a body and it opens really high and then closes. So what it means is that there is a bullish trend, sorry, there is a strong bearish trend, okay, but it could not hold. So such things, and you will also find a gap. That means the closing price and the next day's opening price is a little bit high. So when such trends are there, then you have to really watch the signal, because there can be a reversal trend. Okay, if it is a falling down and then there is a gap, there is a possibility that it will bounce back, but after bouncing back, it will again continue to fall. The similar things will be happening for this one also. Okay, now this is a very common pattern. It is called engulfing, and then Japanese term harami. Okay, though in the Hindi word it may not meet so good, but the concept is that if you see the two consecutive things, the second one's body is more than the first one. This is called bullish engulfing, because the second candlestick pattern, it is a more than the first one. So it is a bullish. In the second case, it is a bearish engulfing. That means the second pattern's body is a more than the first one's body. And in this case, what will happen? It will appear at the top, and then there will be a sudden fall. Here, this one typically appears at the bottom, and then there will be sudden rise. And similarly, the harami pattern, this is also similar in nature, okay? But the size of the haramis is a little bit more, and then the color does not matter. So don't look at the color, but look at the pattern. Now let me go to several these things, whether we can find it. Here it almost appeared, but it is there is a similar pattern. I will name it. Okay, it is a dark cloud cover. This name is there, but you will find such pattern very often. This is one of the example. You can see it is appearing at the downtrend, and this one's body is less than, then it is going to rise. A similar characteristic almost has appeared here. It is also appearing here. You can see that if you go a little bit before, it is falling down, falling down, falling down, then this body is less than this. And this is a very common pattern. You will find innumerable examples of this pattern. Okay. Any question till this point? Okay, I mentioned dark cloud cover. It is almost similar to the previous one, which is an engulfing pattern, but it will be little bit up. Okay, so when it is little bit down, the effect will be also the same. The little bit up, the effect also will be the same. So you will see the second color matters. That means the second color is the bearish. So it is going to be down in future. Sorry. Okay. So here also it is the same. The color of the second really matters. It is falling down, and then there is a bullish trend, and it will go up. You can find this here. It is almost the same thing. It is going to be now. This is dark cloud cover is almost these things. You can see it is a dark cloud cover. That the opening section is more than that, and then it is falling down. So it is an example of this one is a dark cloud cover. Then three candlesticks pattern. Now, till now we have known, okay, there are the previous one is a two candlesticks. This is the three candlesticks. Three candlesticks means there are three candlesticks in a row that you have to analyze. If there is a gap between the first and the second one, and then the second and the third one, again, sorry, the second and the third one, it has gone up, then definitely it is going to be a change in the pattern which has happened at the below. Whereas in this case, the left one is called the morning star, right one is called the evening star, but the pattern is almost the same. That means there is a sudden gap, there's a gap up, and then there's a gap down. Here also it is the same, there's a gap up, gap down, and there is going to be reversal of the pattern. So typically if you know this pattern and then use the lines which is the support and resistance line which I have shown you earlier, you will be able to know from the candlesticks pattern what can be the probable stock price going to rise or fall in the next day. So now let me go to the volume part. Volume is a very interesting thing. You will see volume typically is a trading volume. That means whether how many pairs of buy and sell has occurred. If the volume has suddenly increasing, definitely it is more number of the interest, and then there's a more amount of the stock uptrend. If there is a sudden shoot in the volume, it can means that the price can fall or the price can go up. That means there is a changing. It will always happen. So below also figure, it shows the change of the volume. Let me show some practical example. For this pattern, you will see that here, okay, there is a color of the volume also. That means how many more, whether overall this is the bearish or the bullish pressure. Now, if you see the combination of the candlesticks versus volume, you will see that suddenly on that particular day, there is a bearish and then there is a huge amount of the volume spike. That means now there is going to be a pattern change. And exactly it has happened the next day onwards. Successfully, the stock price has fallen down. Similar things you can also find out here. You have noticed this one, there is a sudden volume up, and after that, the stock prices are rising. Okay. So this volume is a very interesting thing. I can take any other stock and then okay, so observe this one. There is a sudden volume up, and then thereafter the stock price is rising. So volume is a very, very key indicator to know that how the stock price is moving forward or downwards. Accordingly, you can predict. Okay. Now, one of the most important subject. risk management, because stock market, you can predict all this technical or fundamental, but finally it is little bit risky game. It is not like that fixed amount of the investment. So risk management, as you know, is a essential part of the life, and continuously you have to do risk management in your life. And then uh, that this is an exercise you have to do it very, very frequently, not really daily, but those who want to make a lot of money in a short term, that means they will use the short term trading technique. Risk management has to be done continuously. Now, how do you do that? So we'll talk about several points of the risk management. We'll talk about the portfolio management, setting the stop loss, what do you call, the learning to sell fast, portfolio rebalancing, learn to sell first, and learn from the, sorry, there is a repetition. Let me remove this. Okay. And then we'll discuss about the SIP, systematic investment plan, which many of you have done in the mutual fund investment. So the risk versus return. As you know, you take more risk and you will get more return. So there are different type of the stocks we have discussed in the earlier classes also. There is a petty stock and there is a costly stock. There is a good company stock. Okay. There are defensive stocks, there are turnaround stocks, and the stocks which are emerging blue stocks. That means earlier they were not performing so well, but now they are coming up. Okay, so the more and more the small stocks, actually small caps, you are going for a more and more return. So people have made money in the small caps, but it is a highly risky stocks. If you are taking a good company, and how to select the good company, I have told in earlier class, and then the risk will be moderate. Okay. For example, if you see now the state of the HDFC Bank, where our salary is deposited, the state HDFC Bank is a very good company. In fact, one of the best private banks. But the current state is quite bad. The stock price has fallen down. But it is, for the long term, it is a good stock. So, which kind of the stock you are going to invest, that matters here. Yes, about the portfolio management. So, here you know that uncertainty is the salient feature of the security investment, and why you are going for the mutual fund. The main reason is that you have diversified your investment in multiple companies. So there is a lean possibility that all the companies will suddenly fall down, and then the companies will make bad things. So better, if you handle with the stocks, do not invest in only 2-3 stocks, but invest in more or less good amount of the companies. It is well known that if you restrict within 15 to 20 maximum number of companies, then you can manage well the stocks. You can go for a more and more number of the companies, but then managing the companies will be difficult. Okay. It is important that you review your portfolio. Okay. That means you sell the bad performers first with the money, and then you buy the good performance. Then do not over diversify. And a famous quotation from the Mark Quiz: diversification. If the security returns are not correlated, diversification could eliminate risk. So we can see the picture later on that if you increase number of the companies, your risk is falling down. Okay? And the probability of success also goes, but after a certain period, typically it goes saturated. So if you invest more and more amount of the companies, it is not necessarily that your probability of the success will go up. But there is a negative part, that means your tracking effort will go up. Why this tracking effort will go up? Because whenever you are buying some stock, you cannot leave the stock just like that. I mean, they are in another respect like a children. You have to take care. You have to, what do you mean by take care? Basically, you have to see the price of the stock. You have to also read the current market news of the stock, and you have to watch every once in 3 months the quarterly performance of the stock. So you have to spend behind the stock certain time. As I have mentioned in the very first day, that the success here is the time. If you spend time, the success will come. But the tracking effort for each of the stock will be there. So every, what you call, once in 2 days in a week, if you spend some time on the stock, your tracking effort goes up and up whenever you are going to have more number of the stocks. Okay, so there are different kind of investor in the market. The first group is called the holy cow. That means their main strategy will be you buy and then hold. You never get out of the stock. You buy at the, what you call, when you are young, and you can only think about selling the stock when you have retired. Yes, holy cow strategy also can work for some of the stocks which are very, very good companies, but many cases this strategy does not work really. There are a few companies, obviously. For example, if you see the HDFC Bank for the long term, the stock prices are going up. They're going up, going down, going up. And if you do not do anything with this, then the stock price, ultimately you are going to be a winner. But such things may not happen for all the stocks. Let me go through the few of the stocks. Okay. And I will go for the large amount of it. So if you hold the stock, you see that such stocks will be rising, rising, rising. But obviously there will be dips. Now, if you ideally you should have sold those stocks, but you will find many investors, because now in the COVID scenario, all the stocks are falling down. Okay, so you may if you are a passive investor, you may hold. I mean, go for a hold. Property, but you will not make some of the money if the stock price is moving horizontal. For example, from January 30th, the stock was almost moving horizontal till the 8th of April. You will not make money because the stock price has is not moving. So the holy cow methodology will not work very aggressively. If you are very aggressive in the stock investor, you will always see your money is growing. So for the stock which is not giving you much return, you may exit and then you may invest the same amount in the growing stock. Peak farmers are something like buy and sell very promptly. They are very aggressive. Okay. And they will prefer the cyclical stocks, the stocks which are going up, going down, going up, going down. With that small period of time, they will make money. Okay. And then there are rice millers. Rice millers is that they will buy heavy quantity of the stocks in one shot. And then, they will sell the stocks very slowly. From time to time, they will start selling that. And the woolen, buy slowly and sell swiftly. So I am more or less of the woolen category because from time to time I will buy the stocks, and then when I try to exit, I will exit in the heavy this thing. I'll book the profit. Okay, so it is not like that any of the strategies are bad, but there are strategies. Okay, that you have to understand. And now you have to ask yourself which type you belong to. You may also have to change the strategies. Some of the stocks you may hold for a long time, okay, because it will go up and up, but it may be a slower pace. Okay, those who are of this typically the best things, that means buy swiftly, sells slowly, and then the first category, sometimes in the long term, there are many profitable. Okay, so we will go a few of the points. Everyone loves to buy the stocks, and no one loves to sell the stock. I mean, this is a very, very important thing, and you have to understand it. So typically, I mean, when you learn from this stock market lesson, suddenly you may find a good company and the stock price is rising. You may jump in to buy the stock. But the biggest lesson or the biggest art is not the art of buying, but the art of selling. And the right time when you should get or exit from the stock is a very, very important, because when you buy the stock, you think that it is like a children, which is not true. And so you have to know that when to sell the stocks. You may not like it, but even with a small thing, you can sell the stocks. Very few people, they sell well. I mean, correctly selling is the biggest and the toughest job. Okay. And many people, they do not understand that when to sell. And this is one of the very important lesson for you. Even if you are a small portion of the money, I will show you one of the example. You have to know when to get out of the stock. Whenever there are good technical signals. So what I will advise you, those who are not in the long game of the stock market investing, and during this COVID time, little bit uncertain, but you will see a lot of stocks are going up. Okay, you pick up the signal, whatever signal I have trained you, and you get into the stocks. Okay, and then whenever there is a strong selling signal, get out of the stock. So that you have to do a practice. Okay, now you may have some 10 or 15 stocks in your portfolio. You may be a little bit wondering that, I mean, which stocks sell, because many of the things are showing the technically sell signal. So take out the stocks which are not performing so well, and you start selling this one. That will be your first priority, not the one which has already been very good. Okay. So one of the disadvantage of holding more amount of the stocks is that the more number of the stocks is that your reaction will be more, because many of the stocks will be pulling in different directions at the force. Okay, and so it will be very, very slower. So if you are holding a very minimal amount of the stocks, your decision will be very, very fast. Okay. Now set a stop loss for every buying. How to set? We'll see. Which means, for example, today you are buying a stock at 100 rupees. Okay. For this particular buying, you will have to set a stop loss. How to set a stop loss? I will show you later on. But you have to watch on that day. So you have to put a register, something like that, and then you have to set a stop loss. That means this is the target price. at 100 rupees I bought the stock, I'm expecting the stock will go up to 104 rupees. But if the stock falls below 97 rupees, I am going to sell it. And selling is difficult because 97 means you have made almost 3% loss, and you have to acknowledge that you have made the mistake, your prediction was wrong, but still dispassionately you have to sell the stock. So the problem is that we never acknowledge that and admit that something has gone wrong and your prediction was wrong for whatever is that. Why your prediction was not? Whether the market was bad? No. Actually, your prediction was bad because you had a wrong decision. So whenever you will revisit, maybe one of the signal you did not attend well, that's why the stock price has fallen down. Definitely, any stock before falling down, it will give you the signal. It is you could not take that decision that whether the price will fall down or the price will go up. Maybe it was giving a signal that the price will fall down, but you thought, no, it is the right time to buy. Okay. So the ego within you, it typically prevents you to sell the stock because you have to acknowledge that you have taken a wrong decision. So sometimes you are having a false hope. You will understand, you will think that, oh, okay, now price has fallen down from the 100 rupees to the 97 rupees. It can again come up to 100 rupees. In fact, it can go beyond 100 rupees. Yes. But sometimes this false hope, whatever you're thinking is not the correct. Because 50% drop in the price needs 100% high to come back to the normal, which is very difficult. For example, the stock price is 100 rupees. It has fallen down to 50 rupees. It is a 50% fall, 50 divided by 100. But now the price is 50 rupees. If you want to have this one to 100 rupees, it is the double the stock price. So 100 rupees high. So if I don't take, say, 50% drop, say 10% drop, if it is a 10% drop from the 90 rupees to the 100 rupees, it is not a 10% jump. It is much more than the 10%. So that you have to understand that the stock, when after falling down, and when it falls down like a, what you call, like a fountain. It falls down heavily. It falls down. You will see in the COVID scenario or anything in the market scenario that it will fall down heavily. Okay. Oh, sorry. Okay. So every 50% loss will begin with a 10% or 20%. So there will be signal to you, hey, the price is falling down. In one day, it will not go to the 50%. And at some point of time, now what would be the ideal point? I typically keep 8 to, 8% from the, the point where you have bought the stock. And then if it is a falling down further, the signals are very, very strong to get out of the stocks. Then I have to acknowledge the loss and then I have to get out. So there is a term that when you snooze, you lose. Okay, that means your weakness is not going to is basically something like that. You are driving the car and then you can be slacking, especially whenever suddenly someone is suddenly coming on the road. You have to immediately be alert and then press the brake. So you cannot, regarding the getting out of the market, selling the market, your decision has to be very, very fast. Regarding the buying, you can wait, you can think for 3-4 days, but not for the selling. Selling, you have to take immediate decision. Okay. So when you say, I can't sell a stock because I don't want to take a loss, the stock does not know who you are and it does not care what you hope. So what you mean is that, suppose a stock price is falling down, okay? Now, do you really want to buy this stock? The answer may not be Yes. I will give an example for doing that. Okay. Okay. Example. Suppose you have invested in Avanti Feed somewhere here. It is going up and up, up and down. You are very happy. You have made a lot of money. Okay. Suppose you have bought it here and then it has reached something here. You have made 50% profit. Then it has started falling down for whatever reason. Okay. With the various signals, it has fallen down and you are not acting on this. The important part is that you have not acted on this. And if I draw some support line, even it has fallen down. Okay. Now think the scenario here. It has fallen down below this one. It has broken the support line. You are still not acting. There is a huge gap of the candle. You are not acting. So you are basically suffering from a hope that the stock price will typically now come to the same level. Now the problem you see, the stock has now this one for this date, for example, almost has fallen by 18%. Now today it is 18%, and you have thought, no, it will recover the 18%. So if you want a reversal, actually it is not 18%. You will see now I'm calculating it. It will be 26%, 24, 25%. So 18% falling down means 24% the stock has to be there. And now currently there is no signal. You have not reacted on that. Now you are sitting idle. You think that, okay, the stock will, it will come up, though it is now today 18%, it will come up to 0 and then even you can overshoot. But you will see the stock is falling down further, and then gone to almost 70% falling down. Now, who is at fault? Whether this is your luck? No, it is not luck. Because you have not controlled your luck. There was enough signal and the loss has started from some things. It has fallen down, this one, and there was a big jump down. There's a gap and 18% lost. You could not understand that stock and then you could not get out. You will see here there is a what you call is a bearish engulfing pattern, and then there is every signal that the stock is going to fall down. Okay, even there was a crossover here. The signal and the MACD has gone negative. You have not attended to any of the signal, thinking that the stock price will go up. But all the parameters are going to show you that stock is going to fall. You have not taken care. That's why now currently you are losing. Now, in this case, better to exit from this market and then look for the opportunities on the same date. What are the good stock price which is going to rise? That's all. So, sell this stock whenever the market or the various sell rules tell you that it is now time to sell. And then most important thing is that have you ever analyzed your failure? Now, suppose, you have not exited from the earlier example at 18%, and then now you are sitting as a 50% loss. Have you gone back and then checked why are you making so much loss in the stock market? Many of the people that do not do. If you do not do, you do not learn. Okay, so typically, an example is that you keep the losses less than 7 to 8% of the buy value. You may sell if a decline from the peak exceeds 12 or 15%. This is a very thumb rule and given by one very important. So what does it mean? It means, for example, you have purchased the stock price at this level. Let me draw a line. at this particular level, and then it has gone up from this particular date.
Devanjan, we are able to see the PPT only, not the graph.
Is it? Oh, just a minute. Sorry. Are you able to see?
No.
Oh, just a minute. Able to see the PPT
Yes.
and able to see the graph?
No.
Oh, just a minute.
Yeah.
Things.
Now we can see.
Okay. Okay. So
Yeah.
there are different strategies. Some people see, okay, from the peak, if the stock value falls by say some percentage, maximum say 8 to 10%, I will put a line here. Okay. And then if it is a falling down below that line, I will exit. That is one of the strategies. Some people say no, from that the date, whatever value I purchased, from that I will maintain. Any of the strategy I would say is a fine. But the important is that you have to set a stop loss. Okay, and then only from the stop loss you can exit from that one. Now, how to set? How to set? There are different techniques. One of the techniques I just started this particular class that use the support line. Support line is a very reliable line that, as I have explained below, that this is the line, okay, and then with this line, whenever it is falling below the line, get exit, okay, and then this particular whatever is the price is considered as a stop loss. So 655 you can see is the value of the stop loss. The stop loss value with the support line will change as the price will move. For example, this price is moving. The support line is also going above. So you're continuously you will see visually and then decide that what price you want to get out of the stock. Okay. The second one is the parabolic SR, which is also a very important thing. As I have explained it, I have not, wait, let me explain. I think in the previous class, sorry, at the beginning of this class, I explained it. So you will see this is the parabolic SR, this is the line. And if the price falls below this value, okay, that means let me join this one. And this, so every day the price, that the green one, it goes up, and then parabolic SR, I have explained that you purchase the stock when the parabolic SAR is below this line. So now this becomes your stop loss. On that day, the stock price was higher. The parabolic SAR is something like a stop loss. And whenever it is falling down, and you will see that the price is going below the parabolic on that particular date, you can exit from the stock. Very, very clear cut signal. Okay. So now let me go another. Ichimoku, as you know, Ichimoku is a very good indicator, and the Ichimoku can be used to set the stop loss. For example, if I take this particular example, let it keep it here. Okay. Now, if I put the Ichimoku on, Yes. So Ichimoku also, wait, let me put off the other thing. Yes, now you can see that it is falling below that. So the Ichimoku cloud line you can consider as an interesting stop loss, or if you consider the Chico line, you can consider, or there is a K versus T cross of this particular one. Next day you can consider, yes, it is falling down, and then the price is below the K line. So we have learned earlier, whenever the price will go below the K line itself, it is acting like a stop loss. So there are different techniques through which you can set the stop loss. Okay. And then moving average crossover. Last is that. Here we can see we'll put up the Ichimoku and then we'll put the moving, because multiple signals will confuse it. So moving on is 20 and 50. We can see, so this particular line, it is following. In fact, before 2-3 days back only, you will come to know. So this particular price target is the stop loss. So you will see that different signals will give different stop loss, but they are nearby. Even if you are not taking the signal, then obviously you are going to make loss in the stock market. Okay. And then I think I will stop here because 1 hour is already over, and then I will take the question. Okay. So any question?
Which stop loss do you prefer to use?
Yeah, sorry. Can you repeat the question?
Which stop loss method do you prefer to use?
I generally prefer to use Ichimoku because I have seen it is one of the most definitive and the most powerful signal. Okay.
Okay, thank you.
Yeah. So there are many what you call there are some books on the Ichimoku you can also read, but I think one of the best book, I mean, I have read. I have a physical copy of the book. Okay. And that book is written by one Indian, but he is basically American. Okay. So that is one of the best book in the Ichimoku. But nevertheless, whatever I have told you, there is one also PowerPoint presentation in the internet about the Ichimoku, and that is also very good. Oh, so these are the things that you can use.
I have a
Yeah,
question.
next. Tell me.
So, based on what type of investor you are, whether, like you said, the holy cow or the pig farmer or the rice miller, so is there a preferred way of using a preferred method of doing the selling based on your investor type?
Okay, my experience says that make it a monthly habit, because see, you are earning and you are not spending 100% of your money, and so every month you are keeping some amount for the investment. Okay, you are, so put that amount of the money in the stock market. It may be less, it may be 20,000, it may be what you call, or whatever amount of the money. I mean, there's no fixed amount. It depends upon your earning and then expenditure. Let me show you one example in few days what I have done. I mean, I've been silent in the stock market for some time, but on 26th May, I have purchased and I have exited from the stock market. Okay, and I've invested how many? I mean, I'm showing you all these transactions. I've started investing, say, Alkamine. Okay, looking at the technical things, I bought at this price and this is the quantity, and then I have spent how much? This is the, yes. So negative means the money has gone out of my pocket. So totally, and the positive means I've sold the cash and sold the stock, and money has gone inside my pocket. So I've invested around 1,16,000 amount of the money. Okay. As on today, that means starting from the 26th May till 4th June, how many number of days? Just a minute. It is, say, 1 week, and then, 5 days, and then 2-3 days more. So today I took a stock, not that everything is going up. Okay. And then I have made total calculation of the 60% profit of my investment. So this is how you will make money within a 1 week, because I'm playing purely on the technical. Okay, obviously these companies are good companies, so I will now play, and all these stocks are going a very, what you call, a roller coaster ride. Okay, if you say Alkylamine. So my target, they are rising stocks, and then say another, I will say, and not that every stock is going positive. You can see that this is the profit I'm making. Some of the stocks are going down also, but say 3%, for example, Godrej Consumer. But I'm very sure Godrej, if you see, because also I have to analyze the. Okay, so no, this stock has fallen down because I have just 2-3 days back I have picked up, but this stock price will go up. I'm 100% sure. All the signals, they are uptrend, and so though temporarily I am making loss, so I am not now focusing only some 5-6 stocks. I'm playing with that, and I'm sure that within another maybe 1 week or 10 days, the percentage profit will go up. So this is how you can make fast money in the stock market. So as an investor, I would advise you to start with the small things, and not like that you have to invest 1 lakh, something like that. But you can invest in the small quantities. You can play with that, or better to play shadow stock market. That means just write it down, like I have purchased today at such and such price, and then revisit after a few days to check whether your decision is correct or not. Okay. And from time to time, you can keep on investing. Any other question?
Dibanjan, you showed volume. Basically, we can see a green line and red line.
Yeah.
Okay, green line indicates that many people or that many volumes has bought. Red line indicates that many people have sold.
No, the volume is the total, the buying pressure or the selling pressure. Okay. If it is a pink line, it shows that overall it is a bullish trade. See, number of transactions is going to be less, but it depends upon how many buyers and the sellers are present on that particular day. If you see there are more number of sellers, the stock price is coming down. Ultimately, the number of the transactions, that means every corresponding buy has got a corresponding sell. Correct?
Okay.
So the color only indicates whether it is a bearish signal or not. Okay, that's all.
Okay.
Do you understand? For example, there is a huge buying pressure on this one. Definitely, the people who are watching the volume, they will know in consecutive days the price is going to be up. So, for example, you have finished your office work in the home, you just observe what is the particular the volume. Okay, you will understand, and next day you will start buying. Within few days, 3 days, you will make 4.3% profit. What else do you want? Only by watching the volume.
Okay. No, still I confused that. See, even we can see a volume when it goes to high as well as when when they are buying, that time also it will show high volume, and when they are selling, that time also it will show high volume.
Yes. So number of transactions. The number of transactions that it is happening, that matters. Okay.
Okay.
It is not, I mean, because every number of transactions for the color means it is the more on what you call this one is a
More
shooting,
buyer.
and that's yes. For example,
Green means more buyers, red means more sellers.
So
Okay.
here, for example, this is a misnomer. Though it is a high volume, okay. The green color does not mean next day the stock price is going to up.
Yes. Yeah.
It means there was a heavy transactions. So that the trend will continue. Whatever trend was happening, it will continue. It is a definite signal. Okay. Plus there are other signals because it is, I mean, oversold condition. It is MACD is less. Plus, if you see Ichimoku signal, it is below that. So there is no way that this particular thing is a good signal. It is always a bad signal. I mean, for you, this particular day, it is a bad signal.
Yeah.
Okay.
Yeah.
Debanchan, can you try to load Adani Green, let's say? My question would be is that would you look into one of the trends which says that, okay, you should still hold on or wait for the downturn, and then it says that, let's say you have lost 5-10%, it has come down, then only you should sell. So would it be possible for you to load Adani Green?
Load what? Adani?
Yes, Adani Green Energy.
Adani Energy, okay?
Yes. I just want to understand that what would be, because it just goes up. I mean, if you see the trend, does it say that it's going to fall, or you should really wait for the fall to happen?
Adani Enterprises or
No, Adani Green.
Green Energy, okay. Yes, so it is now a strong uptrend signal.
Are you sharing something? I don't see anything.
Just a minute. I'm sharing something. Hold on. Are you able to see?
Yes, now I can see. So my question to you is that, yeah, you always mention that you should learn to sell. Now, do you suggest that we sell it, or you suggest that let's see a downturn, there is a trend, and then only you should sell it? I mean, what's general opinion?
Yeah, so now see, this stock is totally uptrend.
Right.
You draw this line, okay? Whenever this will fall below this line, and then there are other, yes, the blue one. Okay. And then you sell. That's all you have to do.
Okay.
Okay. So now currently it is a strong uptrend. You don't have to think. Rather, you can start investing also. Okay. Whenever it is falling, going up, 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 it is way above the Ichimoku cloud. You can see.
Right.
Okay. So it is a very strong bullish signal. Don't think about selling right now. There is no signal of selling this one. Rather, there was on this particular date when it has crossed the Ichimoku cloud on 17th April, it was the right time to invest in this stock. Okay.
Okay, got it.
But right now there is no question of any selling.
But the way you mentioned, look for the trend. As soon as you get that it is reaching closer, just sell it off.
Not when there is a sell signal, and the sell signal will be determined by various parameters, like I have shown you, that parabolic SR and all these things.
Got it.
Okay, you can plot this parabolic SR. And if you have not invested in this software, there is a good software also, I think, what you call trend line or charting. Charting is a good software. Where is you can also this one. So here you can say Adani greens, green energy. The problem- Are you able to hear me?
No, it's breaking little.
It is breaking. It's not. Sorry, this charting is not working. Otherwise, sometimes it will show with a good chart. You can try it. Okay.
Yeah,
Any other
sure.
question?
Thanks.
Yeah, Devanjan, actually, I need one suggestion on this one, like Bajaj Finance, because this company is really good and their like business also good, but yeah, due to this COVID-19, right now the price is lower. Actually, we can. So,
Yes.
is it good time to invest on that?
Good question. It is a very good company. I also have a lot of stock. The Bajaj Finance, see, the whole finance sector will go bad now, at least I will say 3 quarters. Okay, so the stock is also moving horizontally, and so I would say okay, it is not because if you see the finance sector, say for the cab driver, they have taken loan for for their vehicle, and they will not be able to pay the EMI. Many of the industries they will not be able to pay you. See, Ichimoku signal is still
Devanjan, your voice is breaking.
so it this is it. Hello, I think
Your voice is
this is
breaking
no.
actually.
I think okay. We are having the circuit now. We are facing in the
I
Teams.
guess now it's better, I guess.
Yeah.
It's not like that. So I would say that for the finance, because there is no, we can see price is the Ichimoku
Oh,
buy right.
sorry, we couldn't understand you because of voice was breaking.
Oh,
Still, it's the
right.
same problem.
Oh,
Yeah, I think it is circuit issue.
Yeah.
okay. A circuit issue. Okay. Okay. So we'll end this session. Next time we'll again try with the Teams. We didn't problem. Okay.
Yep. Okay.
So okay. Bye.
Bye. Thank you.
Thank you.
Thank you. Bye-bye.
Thank you. Bye-bye.
Thank you. Bye-bye.
Bye.